in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets brace for the latest payrolls report after a week of softer than expected labour market data. President Trump says he will be imposing fairly substantial tariffs on chip imports. And Nvidia may have a new challenge. Broadcom and OpenAI team up to produce an AI accelerator starting 2026. So let's have a look at how markets are faring 3.5 hours before the non-farm payrolls. Looks like the good vibes are continuing today. Don't forget, we've had 2 days of gains now. The S&P 500 was up 0.8% yesterday, pointing to a higher open today, and the Nasdaq 100 is still within 1% of a record, pointing to a 0.5% gain today. The dollar index a little bit softer as well. Don't forget, there was some strength during the week after we had that weakness in sterling and also, of course, in the euro. Let's take a look at bonds because they have backed off as well quite substantially. Will that stay the case throughout the session? Well, we'll see after the labour market data. The 2-year yield, 3.58, the 10-year yield, 4.16, and that 30-year yield all the way back down to 4.85. Quite the difference from Tuesday. And I do want to point out as well that there's a little bit of weightiness to oil for a second day. Expectations now for OPEC Plus to reintroduce more barrels in October are very much building in the market as we await that meeting Sunday. So let's get to some individual stocks to watch now. Here's Valerie Teitel in London. Valerie.
Let's start with Broadcom. Maybe the reason why NASDAQ futures are up so decently. Broadcom coming out not only with a beat when it came to its revenue, also boosted its outlook on the back of this mystery new customer. It turns out it's OpenAI, the maker of ChatGPT. They'll be working together in a partnership to create a new AI chip in a sign that they want to come up against NVIDIA's dominance in that very lucrative slice of the market. So Broadcom shares up nearly 9% in the pre-market. Let's stay with earnings and move over to DocuSign. This is the electronic signature company. They gave a decent outlook, Bonnie, especially when it comes to these new AI tools that they're trying to launch. The shares of DocuSign up 8.5% in pre-market trade. Lastly, let's end with Lululemon. A bit of a disappointment here. Their sales figures disappointing for a third quarter in a row. They've also slashed their guidance when it came to both revenue and earnings per share, warning that they are facing a $250 million hit from Trump's decision to end the de minimis rule when it comes to small packages being shipped from China. So shares of Lululemon sinking 17%, adding to their losses this year, which have already racked up to 45%. Bonnie.
Wow, nearly a fifth of its market cap. That is pre-market trading, though, so we'll see in the market hours. Valerie Teitel, thank you. This hour, we'll count you down to the jobs report with Torsten Slok of Apollo. And don't miss our interview with BMW CEO Oliver Zipse later this hour. But first, let's get a preview of those payrolls now with Bloomberg's Justina Lee. So, Justina, what are we anticipating today, given that sentiment going into this, just the broader market sentiment, seems to be quite positive? Would that all change if there were to be a disappointment at 8:30 Eastern?
Yeah, I think today is one of those situations where traders are really counting on, some degree of bad news to actually be good news. What economists are expecting right now is 75,000 kind of jobs created in August, which would be kind of the fourth straight month of job creation kind of below 100,000. And that would be kind of the softest run in a few years. And as for unemployment rate, people are expecting that to climb a little bit to 4.3%. But that would already be the highest in quite a while. But even kind of with those numbers, I think what a lot of stock market bulls are counting on is that would really cement the quarter-point rate cut that people are expecting from the Fed this month, and maybe could point to kind of one more cut later this year. And I think that's kind of what really people are focusing on, the monetary policy trajectory from this point onward.
Justina, we eked out a record on the S&P 500, hard as it is to believe, yesterday, even with all of the bond market jitters this week and the impact on the broader market. What overall impact will the Broadcom announcement and, of course, its results have on this market, given that NVIDIA is so important to it?
Yeah, exactly. I think that kind of a lot of this enthusiasm is kind of counting on kind of the AI boom, keeping kind of everything still looking good. And, of course, kind of with the Fed report, people kind of want this kind of Goldilocks situation for the U.S. economy to still be kind of humming along with support from this kind of structural cycle of AI investment, but also at the same time some support for possibly kind of an easier monetary policy down the road.
And Justina, it does seem to be that bond market jitters are in the rearview mirror, at least for now. Can we say that with some confidence?
Yeah, it seems like everything is kind of diverging a little bit, depending on what maturities of treasuries you're looking at, right? I think on the short end, people are kind of quite optimistic for rate cuts coming forward. And so we've seen yields come down a little bit. But as for the long end, I think people are still thinking about kind of inflation worries coming from the tariffs, with President Trump talking again about those tariffs on semiconductor. And of course, kind of in the even longer term, in terms of those Fed independence concerns that we're kind of see coming out of Congress, yesterday as well. And so I think we're kind of seeing very different concerns driving the short end and the long end of the bond market right now.
Justina, thank you so much. That is Bloomberg's Justina Lee. Staying in Washington, President Trump says his administration isn't far from imposing tariffs on semiconductor imports.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, planning to come in, there will not be a tariff.
For more, I'm joined by Bloomberg's Kasia Klemashinska, who leads our DC breaking news coverage. Kasia, the president was surrounded by Silicon Valley CEOs, although notably absent was Elon Musk. What do we know about any potential levy? Was there any reaction from the bosses?
Good morning. Indeed, we saw President Trump yesterday hosting a dinner at the White House, highlighting this AI boom and promising tech companies that he will provide them with the electricity supply they need to power their data centers. But he also warned of high tariffs, high penalties for the tech companies that are not investing in the U.S. So the idea here is that President Trump wants to bring those high-paying jobs here to the U.S., and he will penalize the companies that aren't investing here. So, of course, he went around the room and asked the tech executives and founders to speak. He had Melania Trump to his left, but Mark Zuckerberg to his right, and he started by highlighting all the investments that those tech companies are making here in the U.S., bringing the jobs here to the U.S.
Well, speaking of which, the Wall Street Journal reporting that the U.S. is eyeing trade talks to renegotiate the USMCA. Of course, the deadline is coming up. What are the details?
This is the biggest trade agreement that the U.S. has with its largest trading partners, Mexico and Canada. And this agreement, signed in 2020 by President Trump, is up for renegotiation every 6 years. So the Wall Street Journal reported that those negotiations might start as early as this week by the U.S. reaching out to its stakeholders, such as companies, such as unions, asking them to comment and perhaps holding a hearing. So this will open this window of long talks that could lead to some changes in this very significant agreement, significant for the U.S., but also for Mexico and Canada. And we know that President Trump spoke to Canada Prime Minister Carney earlier this week, and the Secretary of State, Marco Rubio, went and met with the Mexico President Sheinbaum in Mexico earlier this week as well.
Yes, of course, and this process of looking for public comment has to be done by January, as I understand it. Now, elsewhere, Trump eyeing firing somebody else, this time the FTC commissioner, and he wants the Supreme Court's help. Now, we know courts have been fairly favourable in this department in recent months. What do we know about this particular appointment and what the Supreme Court might say about it?
So this time it's about the FTC, Federal Trade Commission, which has one last Democratic commissioner that Trump was trying to get rid of. This Commissioner Rebecca Slaughter filed a lawsuit, and a lower court allowed to bring her back. So President Trump took it to the Supreme Court, asking the Supreme Court to allow him to fire her immediately, but also to issue a more definite ruling about how much power exactly he has over this one agency. And of course, we here at Bloomberg watch it very closely because President Trump is also eyeing some changes at the Federal Reserve. So those two rulings might be related.
Kasia, thank you so much. Always keeping us up to date. That is Kasia Klemashinska in Washington. Focusing back on chips now, Bloomberg has learned that Broadcom is helping OpenAI design and produce an AI accelerator with plans to ship the first chips next year. Let's get more from Bloomberg Intelligence analyst Matthew Bloxham. So Matt, what do we know about the specifics of this particular accelerator and how it might be different to NVIDIA's, for example?
Yeah, well, as you mentioned, this is a kind of partnership with OpenAI. So I think why the details aren't particularly clear yet, clearly this is going to be a chip which is custom designed to work well with OpenAI's AI system. So I think we'll have to see how that plays out. But I think that's certainly a kind of an encouraging sign for OpenAI, you know, given that so many different companies are putting demands on NVIDIA for their chips, not just in terms of the volume, but in terms of the evolution path and customizing that technology to fit best with their own stuff. The fact that OpenAI is going to have a partnership with somebody that allows them to kind of tailor the technology to their demands, I think is encouraging. And you'll see for Broadcom, it's a big order. I think our press stories were suggesting about a $10 billion order. This is quite a significant uplift for Broadcom's outlook.
Does it change the marketplace at all, particularly for NVIDIA? I mean, are customers sticky? Is there anything, you know, like switching, for example? Does that ever happen?
It does, but I mean, clearly not so much switching so far because NVIDIA is just so dominant. But I think we are seeing the likes of Huawei, for example, in China, try to compete with NVIDIA on chips. I think the issue for a lot of people that are really kind of embedded with the NVIDIA platform is that shifting to something else does take or creates a lot of friction. You know, the NVIDIA systems work a certain way, people get specialized in it, and so then to kind of add another technology system alongside it does make it difficult for the engineers to adapt. So I think, whilst this maybe mid to long term is a really good opportunity for Broadcom, and I think mid to long term there clearly is going to be a lot more competition for NVIDIA in this space. In the near term, a lot of friction about running different technologies side by side and getting them to work together. So I think NVIDIA's position as a dominant player is pretty robust for the near term at least.
All right, fantastic context. Our thanks to you. That is Bloomberg Intelligence analyst Matthew Bloxham. Now, two other top stories trending on the terminal this morning. Apple's annual sales in India hit a record of nearly $9 billion in the last fiscal year. iPhones accounted for a majority of the sales. Demand for MacBooks also surged. The tech giant expects India to become a key market in coming years and is expanding its retail footprint and iPhone production in the country. AI startup Anthropic is blocking its services from Chinese-controlled companies. The company said it's taking steps to prevent a U.S. adversary from advancing in AI and threatening American national security. China slaps duties on pork imports from the European Union. According to China's Ministry of Commerce, the preliminary levies will range from 15% to 62%. The move is another blow to hog farmers in Europe who are contending with slowing demand and the fallout from disease outbreaks. Coming up, we'll hear from Liberty Global Chairman John Malone on the mentor that shaped his career. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Liberty Global Chairman John Malone joined Bloomberg TV's David Gura to discuss his new book, Born to be Wired, coming out Tuesday. Malone reflected on the landmark deals that shaped his career and changed his outlook on the future of streaming and cable.
I had a great mentor early, Moses Shapiro at General Industries. He was the chairman. And he was a tough old bird. But he would teach me about the Talmud. Okay? And he said, one of the things the Talmud teaches you is ask yourself the question, if not.
If not.
If not. So if your model, if your business plan works, great. But ask yourself the question, well, what if it doesn't? What if your assumptions are wrong? What if this doesn't work or that doesn't work? Where are you at that point? What's the downside? How much risk are you really taking? So you really try and look risk very hard in terms of how you finance something. Do you have partners in it? The government's always your partner from a tax perspective, so don't forget that you can deduct your failures from your successes. Don't ever get to where you can't. You're going to have lenders. If they have risk, They're going to help you make sure that you're not taking too much risk. So they become good partners in assessing risk. And if you structure it properly, if you do get in trouble, they're buying lunch, you're not, right? Kind of an attitude. Don't ever count on anything being for sure. And so that has colored the structure of the organizations that I've put together over time. So a typical thing for me would be no debt at the parent. Subsidiaries would be levered rationally but substantially, particularly if there's tax or other advantages. And so the parent was always in a position to rescue the subsidiary, but never in jeopardy of a single torpedo, a single bad thing taking it all down. So risk avoidance coming out of the TCI survival, I think, was the #1 lesson that I learned. Diversify, never cross-guarantee, never consolidate liabilities unless you're really, really comfortable. Just to get an eighth of a point better deal on your financing, don't go there. Try and isolate your risk. We even came up with a strategy called the outhouse theory. If you're going to do what you regard as an uncertain acquisition, buy it into a standalone capital structure. Be willing to pay whatever the debt risk represents. Make sure you can refinance it timely if it works. And if it doesn't work, structure it so it doesn't poison the whole barrel of apples.
Liberty Global Chairman John Malone speaking there to Bloomberg's David Gura. You can listen to the entire interview on David's The Big Take podcast. Let's take a quick look at markets now, just about 3 hours before the non-farm payrolls report. We are in a positive mood. The S&P looking to continue its streak, albeit a 2-day streak, but we did eke out a record yesterday. Futures pointing to another gain of 0.2%. You are seeing some weakness in the US dollar, but bear in mind, it had been strengthening this week thanks to sterling and euro moves. And of course, as always, there's a little bit of trepidation before jobs. And that 2-year yield, as much as it's not really moving today, it's at 358.34. Don't forget, it got close to 366 Wednesday in that crazy session. So that's nearly an 8 basis point move, quite substantial for the Fed sensitive 2-year. Well, coming up, rebranding the Department of Defense. More on the new name and a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
The beauty of sports investing, these are exposures that you can't get anywhere else. They're non-correlated to anything else that you can invest in. And generally speaking, they've been going up 10 to 15% per year for the last 15 years. So it checks every box on the financial side. I think the emotional connection is kind of the gravy on top.
Ares Management CEO Michael Argetti speaking to Bloomberg about the firm's new sports and media fund. Time now for your front page news. First up, on the Washington Post, President Trump's plan to change the name of the Defense Department to Department of War. After teasing the change for weeks, he will sign an executive order today to revert to the moniker not used since the 1940s. An official name change would likely require an act of Congress. Next up on the Wall Street Journal, the battle between Harvard and the Trump administration continues. President Trump has vowed to appeal the decision to restore $2.2 billion in research funds and said the university remains ineligible for future funds. Harvard President Alan Garber acknowledged the challenge, saying, quote, they will continue to assess the implications of the opinion and monitor further legal developments. And on the New York Times front page, New York City Mayor Eric Adams is said to be considering dropping out of the mayoral race. Adams has told a small group of friends and advisors that he is seriously considering job opportunities that would make him suspend his campaign. It's been reported that President Trump has been in touch with the mayor and his associates about a potential job in the hopes of creating a two-person race between Andrew Cuomo and Zoran Mamdani. All right, let's take a look at markets about 3 hours before non-farm payrolls, which could be crucial Nasdaq 100 futures pointing to a brighter open once again today. Don't forget, we are within 1% of the Nasdaq 100 all-time high, and Broadcom did report earnings that pleased investors, and also out with that announcement on OpenAI today, really giving that stock a boost and helping the Nasdaq 100. Another day of weightiness to crude. That's 2 days now for Brent and for WTI. OPEC Plus, of course, meeting on Sunday. It's widely expected that they'll introduce more barrels once again in October. And that two-year yield going nowhere, but it has had a rocky week. It was up to almost 366 earlier in the week, of course, back down to 358.54 as Fed rate cut expectations are built into the markets. Coming up, we count down to payrolls with Torsten Slok of Apollo Global Management. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Countdown to non-farm payrolls. Markets brace for the latest jobs report that could confirm a cooling labor market. Fairly substantial. President Trump says he'll be imposing those kinds of levies on chip imports. And Broadcom and OpenAI team up to produce an AI accelerator starting next year. A positive tone, in fact, this morning, markets-wise, as we look to futures to tell us the direction. S&P futures pointing to a gain of 0.2% after eking out a record on that index yesterday. The Nasdaq 100 is also within 1% of its record, and look, Broadcom really having an impact there. Futures pointing to a gain of about 0.5%. Dollar index a little bit weaker. We are going into those payrolls. There's a bit of trepidation, but also there was strength earlier in the week thanks to sterling and euro moves. If we look at the bond market, we're not seeing too much movement today. 358.54 on the Fed-sensitive 2-year, and then on the 30-year, we're back down to 485. So it would seem like all is calm in that market for today. Crude oil, of course, lower for a second day as we anticipate more production in October once OPEC Plus meets Sunday. Let's get straight down to some stocks to watch now for the day ahead. Here's Valerie Teitel in London.
Good morning, Bonnie. Let's start with Broadcom. Main reason for the outperformance of the Nasdaq this morning. Broadcom shares up 8.6% in pre-market trade. They gave a strong outlook in their earnings last night, and the CEO mentioned that they had found a new customer. It turns out to be no other than ChatGPT's maker, OpenAI. $10 billion of new revenues from this new customer as they sign a pact to develop and produce an AI chip, which they hope to be in production by next year. So that's leading the tech rally on so far this morning with Broadcom. Let's stay in earnings and move over to DocuSign. This is the electronic signature company out with earnings, gave a decent guidance when it came to revenue, up 8.5% in pre-market trade. They boosted their annual outlook off the back of some new AI tools that they're pioneering, hoping to help their customers out. Let's stay in earnings, but this one is a bit more of a disappointment. Lululemon. Third quarter in a row, Vonnie, they've disappointed on sales. They also slashed their targets for revenue and earnings per share and warned of a $240 million hit from Trump's decision to end the de minimis rule when it comes to importing small packages into the U.S. So Lululemon down nearly 18% in pre-market, adding to its woes. It's already fallen around 45% year to date. Vonnie.
Going to be a tough day ahead for Lulu. Valerie, thank you so much. That's Valerie Teitel in London. So just 3 hours now until the jobs report. Joining us is Bloomberg's Michael McKee. So, Michael, we have Waller obviously calling for a series of cuts coming up, but there are several members that maybe are undecided. I'm thinking of Goolsbee, Hammock saying she doesn't see a case for it, and maybe even John Williams. Is September a done deal, and is it based on today's report?
Well, September is kind of a done deal at this point, although this report today will have a major impact on the thinking of the Fed as well as the CPI next week. You were talking at the top of the show here about markets going into this with trepidation. That may be because this is going to be one of those good news, bad news situations where good news for the employment picture is bad news for the markets because it might push the Fed away from cuts. But right now, we are expecting not so good news, and the markets are expecting that the Fed will cut rates. 75,000 jobs created, not very many, more than last month. But we're also going to be looking very closely at the revisions because, of course, we had those big revisions last time to the May and June numbers. We'll see how the June and July numbers come out today. Unemployment expected to tick up a little bit, and that just fits the overall pattern. But, you know, Vani, what's kind of weird is the whisper number is suggesting that we're going to get 75,000. They're right on with the survey. This chart here is interesting. It does show you how many revisions, how the revisions do work. We have had a lot of revisions lower, the white line there. And you can see the big revisions on the right side from the last month. But look all the way over on the left, and you'll see that in 1 month alone, January 2024, there was a revision that was just as large as we got last week, but that was just for 1 month. So it isn't unusual at all.
Mike, it's strange to be asking this question, but this is the first jobs report under the new BLS chief. Could it make any kind of a difference even at the margin?
No, not even at the margins. And this is only the acting chief in place right now. The new chief that the president has appointed hasn't been confirmed to the job. But the commissioner does not even see the reports until Wednesday when they are all completed. So the commissioner's job is basically to transmit those reports over to the Council of Economic Advisors, which they would have done last night at 6 p.m. And it's interesting, Donald Trump gave some sort of downbeat comments on the numbers last night at his photo op with the tech CEOs, and he knows what the numbers are. So perhaps the president was somewhat disappointed in what we're going to see today.
Mike, you've been in Washington. You've, heard the whispers and the chatter. What's the thinking? Is it going to be Lisa Cook or Stephen Myron next week?
It is probably going to be Lisa Cook, maybe as early as today, finding out whether or not she keeps her job. If she keeps her job, she'll be there for the meeting on September 17th. And Stephen Myron, we anticipate, will also be at the meeting because the Republicans have been told by the president to get him through. So it appears that he will. No Republicans really gave him a hard time in his hearing yesterday, despite the flack he took from Democrats. So it looks like he's a done deal. It's just a question of fitting it in on their calendar.
Yeah, a lot's been made of the fact that, he's sort of taking a semi-leave of absence from the White House to do this job for 4 months, as he was saying yesterday. Is that doable? Can somebody sort of, wall themselves off for 4 months and be completely politically independent?
It's not at all possible because the concept is you would go back to your job, and you're not going back to your job if you don't keep your boss happy while you're gone. So the implication is he will vote as the president instructs him to vote. Now, there is a legal question about whether he can just take a leave of absence. The Federal Reserve Act says Fed officials cannot have any other employment, any other job. Does this count? We don't know. We don't know if somebody's going to bother to sue or not, since it's only for a couple of months. But it is an interesting proposition that he could be breaking the law to serve the president. We'll find out.
Mike, there's some question mark over whether the tariffs might have to be rolled back or might have to change in some way, if they aren't rolled back by the courts. Once all of the, court-related avenues are exhausted, let's put it that way. And then there's also the idea that today's jobs data might be weak, revisions might be weak, and so on. Are there scenarios where the Fed could actually seriously consider a 50 basis point move?
I don't think so at this point because we don't know what's going to happen with the tariffs, and anything is possible at this point. That's one reason I say it's not completely baked in, but I wouldn't expect any kind of decision on the tariffs that would hold for any particular period of time before the 17th of September. That would be rather amazing speed for any court. And then in terms of the economy, the Fed is already preparing to cut 25. It would have to be a really bad number and a sort of collapse in inflation for them to consider 50. This isn't a period where we're seeing a terribly bad decline in the labor market. It's generally okay. It's just slowing down at this point. We're not seeing people fired. We're seeing people just not getting hired.
Michael, always fantastic context. Thank you so much. That is Bloomberg's Michael McKee in Washington, D.C. there. And later today, we'll be speaking to the Labour Secretary, Laurie Chavez de Reamer. She joins Open Interest at 9:30 a.m. for the White House reaction to the jobs numbers. Tension in the semiconductor space. Bloomberg has learned that Broadcom is helping OpenAI design and produce an AI accelerator chip from next year. Potentially a challenge to the biggest stock in the world, NVIDIA. For more detail, I'm joined by Bloomberg Intelligence analyst Matthew Bloxham. Matthew, talk us through what this potential new chip might be and whether it really would be a direct competitor in any way to NVIDIA.
Yeah, well, I mean, I think it's certainly intended to be a direct competitor to NVIDIA, and I think what we've learned is that initially, at least, the chip will be used purely for OpenAI's own uses, but that clearly would create demand tension for NVIDIA about where OpenAI is sourcing its processing power, and beyond that, could start to offer it to external customers too. So, I think in the kind of near term, at least probably the impact on NVIDIA is relatively modest. Now, I guess you're seeing that in initial share price reaction, not least because there's a lot of friction involved in shifting from one supplier to another, or even getting two different technologies to run side by side without too many issues. But I think clearly, longer term, one of the question marks about the NVIDIA mid to long term growth story is whether there are going to be serious rivals that come in and challenge their dominance in this market. And I guess this is a sign that their competitors are indeed investing and trying to kind of take a bigger share of that big AI chip market.
Matt, I remember analysts last year talking up Broadcom, and yet the stock was going absolutely nowhere, and suddenly we're 100% higher year over year, and then another 8% move in the pre-market this morning. I'm curious if this $10 billion, albeit, customer is enough to, ease any concerns about Broadcom slowing growth, and, if Broadcom would need to get more customers in order to keep this valuation going.
Yeah, exactly. I mean, this is definitely having a new customer, and also 10 billion is not big in the grand scheme of things, but a significant new order. And clearly, the kind of intention would be that over the midterm, OpenAI will make much greater use of this chip, and that will lead to more orders from other companies. So I think clearly, initially a muted reaction to kind of some of the recent guidance that's been given by the company on the back of big expectations. But I think clearly that these comments from the CEO about this kind of new leg of their demand story is definitely a move in the right direction. And clearly, it doesn't kick in until 2026, so it might take a little bit of time for it to really play out. But definitely, it helps to underpin a more optimistic growth outlook for the company.
NVIDIA seems to have been brilliant about making their customers sticky in the sense that they get them on the platform and then they do these upgrades, and then, because there is so much demand and so little product, you're promised Blackwell, but only if you stick with them and so on. How would it work if a customer were to decide to change?
Yeah, I think as the customer, you'd have to have an incredibly complex and meticulous transition plan, and it's realistically something that I don't think could happen in a short space of time. Most likely, I would think you'd probably be using the Broadcom technology in a quite discrete part of your technology setup, so that it's kind of running in parallel with NVIDIA. Obviously, we'll have to see how the chip's being designed to see whether they're kind of integrating in some kind of compatibility with the NVIDIA environment. But it's something you have to think long and hard about as a customer, because as you said, NVIDIA ties people in with incentives, and right now, you don't want to suddenly be dropping down their order book given the kind of the supply constraints on this technology.
Any good news from any semiconductor these days seems to draw the gaze of the administration, and I'm wondering if Hock Tan has been one of those that has visited the White House.
I don't know myself personally, but I can't imagine that he hasn't been in touch with the administration. I see the dinner that we've heard. There's clearly a huge incentive on all these companies to make sure that they're working closely with the US companies and that they're manufacturing as much as they can in the US. And clearly the implications of last night's dinner and what that means for all sorts of industries could take quite a long time to kind of figure out, because when you think about it, pretty much everything we use these days has semiconductors in it, chips in it, and so there's going to be a lot of head scratching and headaches for lots of companies across different sectors about their supply chain to make sure that they're not going to be exposed to quite significant tariffs.
Yeah, for sure, Matt. Thank you so much. That is Matthew Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Apple's annual sales in India hit a record of nearly $9 billion in the last fiscal year. iPhones accounted for a majority of the sales. Demand for MacBooks also surged. The tech giant expects India to become a key market in coming years and is expanding its retail footprint and iPhone production in the country. AI startup Anthropic is blocking its services from Chinese-controlled companies. The company said it's taking steps to prevent a U.S. adversary from advancing in AI and threatening American national security. China slaps duties on pork imports from the European Union. According to China's Ministry of Commerce, the preliminary levies will range from 15% to 62%. The move just another blow to hog farmers in Europe who are contending with slowing demand and the fallout from disease outbreaks. Coming up, OpenAI partners with Broadcom to take on NVIDIA. More next. This is Bloomberg.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, building, planning to come in, there will not be a tariff.
President Trump speaking at the White House while hosting tech leaders including Mark Zuckerberg, Tim Cook and Sam Altman, among others. For more, I'm joined by Bloomberg's Kasia Klimashinska, who leads our DC breaking news coverage. Kasia, the president was surrounded by Silicon Valley CEOs about those potential chip import tariffs. What do we know about what those potential levies might be? Did we see any reactions from the big tech bosses?
Yes, so here we had President Trump yesterday surrounded, as you mentioned, by those tech CEOs and founders here at the White House. And President Trump threatened once again, not for the first time, high tariffs on semiconductors. In the past, he said that they might reach 100%, 200, or even 300%. And he has reiterated that they are coming soon. But as we know, several of those threats went nowhere, or when they finally materialized, they were eventually much lower than initially announced. So we have to see President Trump has threatened tariffs on several sectors, including pharmaceuticals, lumber. We know he imposed them on aluminum and copper. So we indeed might see some penalties later this year. But as President Trump said, they will only penalize companies that are not producing or promising to invest here in the U.S. So companies like Apple, for example, will most likely be spared.
Yeah, it's fascinating because you have to wonder if he isn't waiting for more offers from these tech companies and, you know, do they one-up each other? Would it be collusion if they spoke to each other to decide how much they could all invest in the United States? I mean, there's so many questions. But, you know, separately from that, we have the USMCA to think about. The Wall Street Journal reporting that the U.S. is eyeing trade talks to renegotiate that deal. Now, of course, it has to be renegotiated every 6 years, right? What are the details?
Exactly. So those are the three significant trading partners, U.S., Canada, and Mexico, with some supply chains spanning across those three nations. So a very important trade agreement there, signed in 2020 initially by President Trump. Back then, Trump was very happy about this agreement. But as we know, when he came back to the White House in his second term, he imposed new tariffs on Canada and Mexico to gain this advantage in those negotiations. So now the Wall Street Journal is reporting that perhaps even as early as this week, there will be some comment period where the U.S. will ask stakeholders here in the U.S., companies and unions, what they think about this agreement. We also know that talks are already ongoing between the U.S. and Canada and the U.S. and Mexico.
All right, so lots of strands to pull on there. Kasia, thank you so much. That is Kasia Klimashinska in Washington. Turning to autos now, Bloomberg's Oliver Crook spoke with BMW CEO Oliver Zipse on navigating U.S. tariffs.
I think it's important that we quickly now come to conclusion of the tariff agreement, which involves 15% import duties into the United States but 0% import duties in the European Union. And I think that is also very important for the European Union to send a signal. We are not afraid of competition. We have a strong industry, and I hope that we can conclude this deal very quickly.
And on the other side of that, if we are sort of to expect 0% tariffs for cars being shipped from the United States into Europe, as you say, you've said many times that you're the largest in terms of volume of dollar amounts of exporters from the U.S. What effect would that have on the bottom line, the reduction of the European tariffs for BMW?
We'll just make a very simplified calculation. Assuming we export from Europe into the United States as much value and as much vehicles as we export from the United States into Europe. Let's just make that assumption.
Yeah.
In the sum of tariffs, we had 10% into Europe and 2.5% into the United States until last year. Now, if you add that together, it's 12.5%, and now we're 15%. So it's not that big of a difference.
Coming up, payrolls, the last day of Fed speak before the blackout period, and OPEC Plus will get you set up for your weekend ahead. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this weekend. Well, the main event, of course, is in just a few hours. August payrolls coming at 8:30 Eastern Time. We do have some Fed speak before the blackout period. Today, of course, the last day. Chicago Fed President Austin Goolsbee will be speaking at 1:45. And the OPEC Plus meeting happens on Sunday, of course, following this week's oil moves and expectations that they will further increase production in October. Let's get to some micro movers now. Not so micro. Broadcom on news of a $10 billion order from AI and a plan to make a new chip. It follows from the two companies collaborating on an AI accelerator, up more than 9% right now. Results did come after the bell yesterday as well. Keep an eye on NVIDIA on that news as well, and also generally on the environment. The dominant player, of course, in AI chips. Shares trading down slightly right now. Not as much as Lululemon, plunging almost 18% after slashing their outlook. The de minimis exemption ending really hurting Lululemon. Maybe Lewis Hamilton will help in the next quarter. They have signed him. All right, let's get to the macro movers before the non-farm payrolls. We do look like we're heading into it in a positive mood. Of course, that's after 2 days of gains. The S&P 500 did eke out a record yesterday, pointing to another 0.2 gain today. Also, the Nasdaq 100 within 1% of its record, up 0.5% in terms of futures today as well. And the 2-year yield going nowhere, so it's really calmed down the bond market, 358.54. We'll see if that changes after 8:30 Eastern. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.